Let's go to markets reporter Sheila Dharmarajan. She's going to give us the latest on how Citigroup and the other bank heavyweights fared in the latest Bloomberg Markets rankings. Sheila.
Well, Eric, $60 billion is the amount of fees banks collected in 2009. That's up 13% from last year. And after ranking number 1 or 2 for the past 3 years, Citigroup, they slipped to number 5 in 2009 when it came to those best paid investment banks on the street. Now, Pandit's pain is Jamie Dimon's gain, because for the second year in a row, JPMorgan got the top prize, taking in almost $5 billion. That's up 16% from last year. And Eric, doing God's work is a steady paying gig, if nothing else. Goldman Sachs took second place honors this year, raking in over $4.5 billion. And it's the 4th year in a row that Goldman Sachs has been in the top 3. And finally, when you talk about bank mergers, well, bank mergers, they don't always translate into more fees. In 2009, B of A Merrill Lynch was 16% of the market, but in 2007, the two combined were 23%. And when you're talking about some of the mergers here, bigger definitely isn't better, particularly when you're looking at that merger advisory business. Top 10 banks saw their share of the merger market dwindle, 64% now versus 74% 9 years ago. Boutique firms, they're the ones who are picking up some of that business, and also the employees. So, for example, the boutique bank Peter J. Solomon, they saw banker payrolls increase 41% in 2009. That's a pretty big difference from the 275,000 bankers that have been let go by the big banks since 2007.